Something fascinating is happening in the world of investing. I'm not talking about Gamestop and the Redditors trying to bring down the hedge funds. Sure, that's fascinating too, but this one, the subject of this video, is arguably a far more significant event. It's been happening fairly slowly for years, and then accelerating dramatically more recently. I'm of course talking about the move away from investments in highly polluting businesses to a far more sustainable approach. But going green isn't simple, and it's not always easy. Now, BlackRock boss Larry Fink has weighed in with his annual letter highlighting the existential crisis presented by the pandemic and how it needs to drive change. The end of investment in fossil fuels? Well, maybe, but at what cost to the economy, jobs, and our personal wealth? Let's take a look together in this video. Hi everyone, I'm Martin Bamford, a chartered financial planner, personal finance YouTuber, and money author. On this channel, I talk about personal finance, investing, and happiness. I make these videos to help you become wealthier and happier. If that sounds like a great result, click on that little red subscribe button so you can become part of our subscriber community. It's completely free, and you'll never miss an episode. When Larry Fink speaks, the business world listens. BlackRock is responsible for managing almost $9 trillion worth of pension and investment assets. It is a big voice. In this latest annual letter to the businesses in which BlackRock invests, Fink says that the COVID-19 pandemic has focused our minds on the fragility of the global economic system. The pandemic has made people think about a potentially much bigger crisis, the climate emergency. He wrote, "I believe that the pandemic has presented such an existential crisis, such a stark reminder of our fragility, that has driven us to confront the global threat of climate change more forcefully, and to consider how, like the pandemic, it will alter our lives." Fink wants company bosses to explain to BlackRock how they are going to get to net zero carbon over the coming decades. So we're talking about carbon neutrality, achieving net zero carbon dioxide emissions by balancing carbon dioxide emissions with removal, or simply eliminating carbon dioxide emissions altogether. That's going to be a lot easier for some businesses than others. If you're in the business of extracting fossil fuels from beneath the ocean floor, for example, or burning them to generate electricity, this talk about net zero requires a fundamental change to the way in which you do business. Fink says that removing investment from high carbon businesses, the biggest polluters, too quickly could lead to significant job losses. He told the BBC, if we all ran away from the hydrocarbons and everything, and if you ran away with most of those companies in the FTSE 100, the job loss in the United Kingdom would be extraordinary. Is that the outcome that they want? This is of course where it comes to balance. There's a fine line between saving the planet and not plunging the world into a deep economic depression. ESG investing, that's environmental, social and corporate governance investing, it is highly nuanced. It's not simple. There is a clear link, for example, between the economy and poverty. Push the economy over a cliff in a drive to dramatically reduce carbon emissions, and you're condemning generations to live in poverty. I come at this subject from someone who strives in most areas of my life to leave a small carbon footprint, but I recognise that this is always about progress, not perfection. For example, my decision last summer to switch from a diesel to an electric vehicle, my Tesla Model 3, was largely driven by environmental considerations. But there's nothing perfect in an environmental sense about driving an electric vehicle, about driving a Tesla. There's a significant carbon cost associated with their production, especially the production of the battery, and that will take years to pay back through reduced carbon emissions. You also have to consider the source of the electricity used to power the batteries. The majority of the battery charging that I do is on our driveway, so I moved our household energy supplier to Octopus Energy, so that power at least is coming from green sources. But what about when I need to use the Tesla supercharger network? So no doubt that juice is coming from fossil fuels, not renewables. Progress, not perfection, is what this is all about. The Larry Fink letter also raises an interesting point, something I've covered in a video before, about the ESG credentials of index tracker funds. A lot of this $9 trillion of BlackRock money is held within index trackers, and that means that BlackRock blindly invests in the best and the worst, from a carbon perspective, companies in the world. When you track the index, you buy everything in that index, whether those businesses are out there planting trees or suffocating children. That's not the stated objective of any of these businesses, by the way, just a metaphor for fossil fuel companies, really. So does their exposure to the dirtiest businesses in the world mean that BlackRock will dump them out of their portfolios? Of course not. Fink said, no, we're not saying that. First of all, none of it's our money. The entire pool of money that we manage, which at the present time is approximately $8.7 trillion, every dollar is somebody else's money. He explains that around 2/3 of the money is within retirement accounts and said, what we are doing is asking companies to move forward. We can sell those shares. We're not going to sell assets in index funds, but we have the power of the vote on behalf of our investors. We can help companies move forward, and that's what we try and do. That's incredibly powerful in itself, and it's the G part of ESG, or governance, corporate governance. It's that part. To date, index fund managers have been pretty light on the corporate governance role, only more recently starting to lend votes to activist investors, but usually on the basis of driving decisions that benefit shareholders, for example, around executive remuneration. Shareholder votes can enact change. Fink explains that as a significant shareholder in many businesses, BlackRock probably has a lot more sway than many environmental protesters. He said, we are moving finance faster than any environmental group. Even if index fund managers have to keep holding everything in the stated index, they can at least use their voice, their votes, to enact change. As I mentioned at the top of this video, there's a significant change happening already. As I love to say, the pandemic has served as a catalyst for many existing changes in the world, none more important than the climate emergency. If you think back to before the onset of the pandemic, the headlines were dominated by Extinction Rebellion and Greta Thunberg. They quickly faded away from the public view at the time when global air travel largely stopped and we all stopped driving our cars everywhere. Cast your mind back to the first few months in lockdown when nature returned to so many places previously dominated by humans, when we could hear birdsong again. The pandemic did more for climate change than years and years of campaigning. And from an investment perspective, investor behaviour appears to have changed for the better too. Larry Fink says that investors allocated $288 billion in 2020 to sustainable assets. That's 96% more than they invested in these ESG funds during the whole of 2019. The change is already happening. We're hearing from governments too about their Build Back Better agendas, with government policy in the coming years likely to favour sustainable investment and a more sustainable economy. In the UK, we've already seen one significant example of this, the ban on the sale of new petrol and diesel engine cars from 2030. There's a degree of inevitability about this change. As I said a moment ago, it was happening already, and the pandemic, like with so many things, has sped that change up, pushing it forwards 5, maybe 10 years in the space of less than a year. I would love to hear your take on this. Will sustainability play a bigger role in your investment decisions in the years to come? Let me know in the comments. If you found this video helpful, there's one super quick thing you can do right this second to support my channel. Smash the like button. And if you fancy being an even bigger supporter, why not share this video with your network, with your friends, someone who you think would get something out of watching it. Press that share button now. Thank you for watching this video. Until next time, I'm Martin Bamford, and remember, when it comes to your money, the more you know, the faster it can grow.